morning, everybody. It's Tyler Daw with Remax Connects, and on today's Mortgage Minute, I'm here with Hugh Calderwood, Vice President of Mortgage Specialists, and he's here to answer some questions about an equity line of credit against your home. Hugh, how you doing?
Doing well, Tyler. It's a hot Friday, but it's been hot for the last week or so.
I know, I'm wearing shorts. I've got my dress shirt on, but I'm also wearing shorts. Listen, I know you're busy. I can't tell you how much I appreciate you coming out here and explaining some of this to the viewers. I find that a lot of these terms, people have heard them, they just don't know what they mean. So for you to come on here and tell us about it and take the time, we do appreciate that.
I appreciate the opportunity, and yes, bank and mortgage people love our acronyms and short terms. Yes, definitely.
Yeah. All right, as always, tell us what the rates are doing right now and what our viewers can expect of fixed versus variable.
Right. So we've seen a trend downwards in terms of the rates that we can offer our clients, so which is a great thing. So in terms of a variable rate, you're looking at a rate probably anywhere from 2 to 2.1, which really works out to prime minus 0.45 to 0.35, depending on each individual scenario. Now, if we look at a 5-year fixed rate, you're looking more closer to, let's say, 2.25 to 2.35. So the fixed rate, you know, it's not going to change over the next 5 years. The variable rate, your rate can either go up or down when the Bank of Canada decides that they're going to change their prime rate.
That's crazy. So fixed 5-year rate at 2.25 to 2.35.
Yeah, it's a great time to either buy property or refinance your existing home.
Okay, cool. Okay, take note, everybody. Okay, Hugh, tell us about the home equity line of credit. Tell us what it is.
Well, a home equity line of credit allows people, either if they're buying a home and have a sizable down payment, or if they already own their own existing home and they have a good amount of equity, we can do a line of credit against their property using the house as collateral, and therefore give them access to more money to be able to draw out that equity when they need it at a very preferential interest rate and very good repayment terms.
Okay, so in terms of interest rates, what are we looking at?
Well, with the home equity line of credit, if you're drawing the money out, you're drawing out the interest at rate of prime plus a half. So 2.45 is prime plus a 0.5%, so you're drawing out at 2.95% currently.
Wow. Okay. So tell us, how would somebody qualify for this? Would they call you and figure out if they'll qualify? How do they do that?
Yes, so they can get in contact with me, and I'll put them in touch with one of our local mortgage specialists to wherever they are, as well as they can, if they want to go into a branch, they can do that as well. But really, in terms of qualifying, it's very similar to if you're buying a home. We really look at, is it affordable? Can they make the payments? How is the credit history? How is the income, job stability? So the same factors we look at. We need to ensure that this is a credit facility that they can manage.
So how much can they take out?
Okay, so they have really two different options, okay? If they already have an existing mortgage on their property, we can lend up to 80% of their existing home. So let's say in a scenario where a house of the value, yes. So if a house is valued at $800,000, and let's say they have a $400,000 mortgage, we can lend 80% of that $800,000 value, which would be $640,000 roughly. So we can put a line of credit in that case for $240,000, which would be the $400,000 existing mortgage plus the new $240,000 line of credit.
Okay, and then, I mean, in my experience, people are using this for renovations, kids' education, buying a cottage. You can use it for all the above?
You can use it for all the above. Basically, the line of credit is there available to you when it's set up. So you don't necessarily have to draw out the funds all at once. You can draw it out as the need comes. So if this year you're doing a renovation or doing your kitchen, you draw out what you need. Next year, if your kids are going off to college, university, you draw out that portion then. Or if you want to buy a cottage a few years down the road, you draw out that part. and you're only paying the interest on the portion that you're drawing out.
So that would be, that's a pretty big benefit for the home equity line of credit right there versus a standard loan.
Yeah, because with a standard loan, or if you're doing this all as a mortgage, let's say, you're paying interest right away on the total amount, even though you may not necessarily have the need for all those funds immediately.
Okay. Okay. So that's interesting stuff.
Right. And in terms of repayment,
Yeah.
the line of credit is completely open, so you can pay it back in full whenever you wish to, but your minimum payment is just the interest that accrues on a monthly basis on the portion that you're drawing out. So therefore, your monthly payments are very low because you don't necessarily have to do any principal payments if you don't wish to.
So you could have it, not use it, but it's just there either for a rainy day or something in the future, correct?
Yes, I would liken it to almost like a credit card. You have a credit card, but if you're not using it, you're not paying anything to have the credit card.
And then you can pay it off whenever you want.
Yes, it's completely open. So as opposed to, let's say, a fixed term mortgage where you may only be allowed to do a 20% repayment, the line of credit is completely open. You can pay it off in full whenever you choose without any penalty.
And I guess, you know, credit cards are at 19%, and this is at what was it?
2.95.
2.95.
Yeah, so if you're carrying any other debts like an unsecured line of credit, a car loan that's financed above 2.95, or like you said, credit cards, this is a great way to lower your borrowing costs. Absolutely.
Okay, that's awesome. You guys hear that out there? All right, Hugh, listen, that's awesome information. We appreciate it like always. And I guess what we're going to do, we're going to have to see you next month. But thanks for the information. Hugh, if someone wants to get a hold of you, can you just tell us how to do that?
Yep, I can be reached at my phone number, which is 519-830-5077, or my email address is hugh.calderwood@bmo.com.
Awesome. Okay, Hugh, thanks very much. We appreciate the time, and then we'll see you next month.
Perfect. Thanks, Tyler. Appreciate it. Have a good day.
You too. Bye now.